Bitcoin's just posted 3 days straight in the green, this time doing over 9%, with the previous day doing just 7%. So the big question now for the bears is this a bear trap? Are they going to get liquidated and destroyed in the market? Let's take a look at some of the major historic signals in these times in the market that can help us identify whether this is a trap for the bears or are we about to explode to the upside. Make sure you like, subscribe, bell notification icon, and if you are an experienced trader, check out the link in the top of the video description. Get our free trading strategies just by clicking that top link and going through those 3 steps. That's the last of the shills for now. Let's start with what's happening in the market. There's been a ton of news out there, of course, over the last 24 hours, especially for Bitcoin, with CZ from Binance saying that he's going to be buying $1 billion worth of Bitcoin, ETH, and BNB. This, of course, has led to some of the pumps in BTC. But in the macro economy, what we are also waiting for in about the next 36 hours is the CPI information, or the core PPI coming out month over month. So you can see this is this column here is the previous, the forecast, and then we're waiting to see what actually comes out from this data. So we have some high impact news announcements coming up, which seems like what everyone is waiting for. Now, some of the other major headlines that have come out are the Fed, or the government, coming to step in to support the banks, basically bring some more money back to the banks, the ones who have collapsed as well, the SVBs here. And of course, there is more regulatory announcements from these bank failures. The fear here is that this is going to spread across the rest of the market, which is why we're seeing the Fed say they're bringing up some regulatory announcements. This happens every single time in the market, and it generally helps support the market. People want to see more rules and regulations come in when something bad goes wrong. We just think back to FTX. The same sort of thing happened then back in November. But it seems like everyone's forgotten about FTX already, which is probably what's going to happen again. We'll have the rules, everyone will feel safe and comfortable and feel like they want to start investing into the markets again. With that said, that has also very quickly changed the sentiment in the interest rates. This is precisely what we've been talking about on the channel. Of course, that's why I say to subscribe and watch the videos. This changes at the drop of a dime. Yesterday, there was a 0% chance that we stay at the same interest rate. Now, this announcement is coming up next week. So we have the core PPI coming up tomorrow, and then next week we have some of the high impact news announcements on Thursday morning, Wednesday night for the other guys in the US there. The interest rates were at a 0% chance of remaining at their current levels. That was yesterday, that was last week, that was last month. Now we have 1 in 3 are saying there is a chance of it remaining where it is, and 2 in 3, or 65% here, say that we're going to get a 25 BPS. That is a very different picture from what we just saw yesterday, last week, and last month. There was all of the possibility of us going up 50 BPS. Now it's almost flipped the opposite. All of the people saying from 50 basically gone to 0. There's going to be no interest rate rise. So this is something to pay a little bit of attention to, is what's coming up, because this is possibly how the market is going to bounce out of this March low. Now, I like to give you all of the facts. That piece is my opinion of why I think the market will bounce out of these March lows. Let's take a look at some of the major setups and price levels where we currently sit for the traditional markets. S&P 500, we are on our 50% level right now at around 3,900 points. You guys that have been following this know that this is the exact price point that we're watching, the first support zone around these December lows to this halfway point at 3,850. So basically call it a 3,800 level for easy numbers. To the downside, should the contagion continue and the interest rates don't affect the market and we continue to dump and the money doesn't come through from the government and everything just turns out to be an absolute hogwash and we fall, the next level we have to watch is around 3,600 points. So let's keep that on the chart. Now, the negative news across the traditional markets doesn't seem to be affecting Bitcoin as it's gone on this 3-day pump. 2% that first day on Saturday, 7.5% on Sunday, and now we see 9.1% on Monday with a new day just opening. But is this a bear trap? Now, I want to pay attention to the logarithmic downtrend. This is that bear market downtrend that I have on the chart. We've looked at this many times before, especially on the breakout through January, then the retest here in February, a bounce out, and another retest at a lower price. This is always a possibility. It's exactly what we talked about back here in February. Even though we get the bounce, it doesn't mean that we can't come back and test the log again, like we've just seen in this case. But the positive, at least for the bulls in the short term, is that we've bounced off our 50% level right here at around $20,300. So that's a good start for the bulls. Now the bears, of course, want to see this get rejected again here and start to break down into some lower tops before it breaks that 50%. That's going to be very bad for Bitcoin because we've already just put in a temporary low here. The last standing support is around $18,500. So even if the bears take control and we drop back down to test the log again, break the 50%, break the swing bottom, which is all pretty bad for Bitcoin, or at least the bulls, at least we still have that last line here at around 18.5. So Bitcoin has bounced off its logarithmic downtrend, but how does that show that this is a bear trap across the history of Bitcoin? Looking back at the previous cycle, the 2018 bear market cycle for Bitcoin, you can see from this logarithmic downtrend, the key highs noted here with the downtrend. Once this market started to break through, it was on for the bulls. This time was a major move to the upside. What we're seeing now doesn't have to repeat exactly the same, but typically once we break through this logarithmic downtrend, we tend to see further upside prices. Now, if we pin the line directly to those exact key turning points, you can zoom right in to see how well this works. You can see the market just break out, come back and test, a tiny little test in this case, but that just showed the strength to the upside for BTC, at least in the 2009 pump after the accumulation at the beginning of that year. Nothing in trading or investing is 100% perfect, and the logarithmic downtrend may seem like it doesn't work in some cases, just like in 2014. But we need to apply other filters around these particular times, especially time filters. Now, these moves to the upside, the breakout of this downtrend, happened within 1 year. We typically know for Bitcoin bear markets, they last at least a year, usually just slightly more than a year. This bear market lasted a total of 411 days. The next one in 2018 was approximately 363 days. So they're around that year period or slightly more. The current one, 378 days. So in this case, this move was under 1 year. So we need to pay attention to that where it starts to break out and tries to consolidate above those particular levels. Now, with that in mind, we can zoom right in to the bottom of where this market started to break out of the log downtrend. This was at the period in June. You can see the breakout, and not a real retest here, but we got that later in August where the market did decide to dump and then start to put in another low in the market before it pumped from that point. So this is a nice easy way to identify the log downtrend, the clearer breakouts rather than the false breakouts here. So keep that in mind when it comes to those log downtrends. Have a time frame in mind, and the longer the time frame is, the stronger that breakout is going to be. And as for the log trend within a market movement already, it's not as clear, but you could still use it on the 2019 top. The market did break out. You can see here it tested it, the pandemic dump, and the market quickly recovered back to that logarithmic downtrend line. If you zoom right in, you can see just how clear the breakout, the retest, the next retest before that fateful day on the 12th, and then the market quickly recovering to test and then take off from that point. So although we've bounced off the logarithmic downtrend, it doesn't necessarily mean that we must go to new highs. There is lower prices below this log downtrend, but it's just one signal that I like to use to identify that the bear market is probably over, and then layer that with other macro key signals. And the major of them all is the breakout of those monthly swing tops. 25,200 is going to be a key level for Bitcoin. What could happen from this point is that we trend sideways and sort of go a little bit quiet. So that's another option as well for the state of the market and the price action coming up over the next few days or couple of weeks. Ideally for the bulls, you definitely want to see it break above $25,000 relatively quickly, and that could come from any of the Fed news, the government news, any of the interest rate announcements. Maybe we don't jump to a 0.5% rate increase. Maybe we only do 0.25%, or we remain as is. Or even some of the news that comes out tonight from the CPI announcements. If any of this stuff is what was expected or better, then we might see the S&P jump from these levels, which is a reasonable support level to come in at the moment, which then could cause more upside to Bitcoin and break that 25K. So that's how the run of the announcements could occur, and then what may happen in price. Now, of course, if any of that doesn't happen, let's wait and see where this holds up for BTC. So in terms of a bear trap, what is a bear trap? Bear trap is rapid price decrease in an uptrend. So a rapid price decrease in an uptrend. We've seen an uptrend here, and then we saw a rapid price decrease. You can't argue that those last few days was a rapid price decrease. Now, the bear trap often breaks local price support before quickly reversing to the upside and encourage traders to open short positions. This is where the crypto investors are getting liquidated. Now, that may have led to a short squeeze with so many people getting liquidated. We can take a look at the liquidations here, especially over the last 4 days. We've seen Bitcoin shorts or trading shorts get liquidated 71 million on the 10th, 70 million on the 11th, 150 million on the 12th, and on the 13th, 177 million. So all in all, getting close to $500 million of liquidations as traders are trying to short the hell out of Bitcoin at those lows. This is what is called a bear trap. Now, to finish the bear trap, we need to get it above $25,000, which is those previous tops. Otherwise, of course, we can get rejected at a lower top, which is bearish, and we start to track down again. That's what the bulls don't want to see. So for now, bears have been trapped. Nearly 500 million or $500 million has been liquidated from shorts trying to get in. That confirms that part of the bear trap. Let's see if the bulls can take control and break above 25,300. Not only has the Bitcoin price pumped, but the market sentiment has also pumped. Now, before I get too deep into this analysis, just a quick reminder about our TIA Gann swing indicator, which helps us identify where those key levels of support and resistance are, where key levels of flipping are, and then also our entries and exits for those trades. Link to that is in the video description, along with our free trading strategies workshop. Click that link. 3 steps, get involved, especially if you are an experienced trader already and want to up your game there with profits. So in terms of the market sentiment, remember yesterday's video, these are the particular areas that we were looking for at around 30 to 40. Reason being is they were previous support and resistance levels on the fear and greed index. Basically those areas where people find some comfort in whatever decisions they've made in the market. So we've found some support here at the lower 30s, 33 and 34. And now in the last 2 days, we have bounced up to neutral at 49 and currently are at 56. We have moved back into greed after being in fear just 3 days ago. We're all the way back into greed, all the way through neutral into greed. But these emotions typically range within a sideways period of the market, that old transitional stage that we've looked at many times before on the S&P. And what I'm expecting, in this case for Bitcoin, this being that transitional period from bears to bulls. You can see why it happens now. The news over the weekend, banks collapsing, and now the market pumping to the upside is just another way that the emotions go from extreme fear to extreme greed, or in this case, fear to greed, and just jumping over that neutral stage altogether. This is a market characteristic of those lows that are forming in the market. People are still unsure whether this is time to pump or time to dump. We saw all of the financial bears coming out over the weekend to tell us that this was the end of the world and all of the banks were about to collapse and lead to a contagion across all the markets around the world. Yet for Bitcoin, at least, we find ourselves bouncing out of those lows. So we have then just completed a bounce off the downtrend. That's a good sign to show that we are starting to trend in the right direction. And that, of course, is to the upside, at least for the bulls. The bears obviously want another opportunity to get lower prices. But so far, the data that we're looking at doesn't seem like they're going to get their day. They may, But for now, let's just continue with the data and continue with hitting that like, subscribing to the channel. Check out the links in the top of the video description right now, or the videos that are popping up on your left-hand side. I'll see you guys back here at the next video. Until then, have a good one and peace out.